Focus on this. This is what we're talking about today is all that matters. Hey, everybody, JC Peretz, and I am joined by my man, Jason Purrs. Say hi to the folks, Jason.
Hey, guys, excited to be with you today. We've got some great stuff to talk about. Let's talk about commodities today, right, JC?
We have to have this conversation, Jason. I actually just got off the phone with Larry McDonald, as a matter of fact, and we were talking about copper and the dollar and everything. He leaves me like 6-minute long messages. Shout out to Larry. This is such an important conversation because I think that as many investors that we talk to and that we observe as well, they're focused on the semiconductors and the software stocks and the crypto and like the GameStop and like all, whatever's like in the news and moving and sexy and changing the world and going to Mars and space. Like, yes, fine. There's a time and a place for everything. And there's nothing wrong with trading those stocks. I trade them myself. I got no beef. Let's not forget that we are in the midst of a commodity super cycle All of the evidence has pointed to that for years. It continues to point in that direction. Um, Nobody's talking about it. Everybody is focused on other things. I love that, right? I love that because if everybody was talking about commodities, Jason, if this was the hottest, then it wouldn't be that attractive to me. But this is a big cycle. We have to have this conversation. We're going to talk about it today. Should we just get right into it? First
Let's
chart,
do
you
it.
said, JC, I want to talk about how we started out the year because that tells us a good story. Talk to me.
Yeah, so when we're looking at this chart here, we're basically looking at the outperformance in crude oil, energy, gold. Bitcoin jumped today, but that actually was down until recently. But if we're just looking at this and going, okay, year to date, granted, it's only been a couple weeks, but the first 5 days, it's like the January trifecta, like you've been talking about in all of your letters. We're talking about the January trifecta. This also worked for relative strength in other areas. So just seeing where money's flowing into to start the year is pretty interesting. And looking at a 5.5% return, and actually, like if you look at XOP, another area, you're looking at an 8% return year to date. Oil was up almost 10%. It came back a little bit today, so almost 10% year to date. I mean, these are huge moves for the commodity market. Gold miners were up 8% year to date at one point already. So, I mean, these are huge moves starting in the commodity market just to start the year. So it makes me really excited to see where we're heading just to end the year. Like right now, looks like we're starting a commodity bull run, and a lot of people aren't paying attention to it. Just like you mentioned earlier, this is what I'm super excited about. People are not paying attention. People are not talking about it. Inflation's been dead. There's no way inflation's ever coming back. Oil's dead. I can't believe you're talking about oil, you crazy guys. But like we talked about earlier, we're looking at oil. It has a very tight coil. It's either going to be a big move one way or the other, and we want to follow it both ways. That move became up. We're following it, and at the moment, it's making some money. It's going the right direction.
Let's take a step back. Folks at home wondering, why am I sitting here talking to JC and Jason Pers, listening to them talk about commodities? I can only speak for myself, and I think I'm speaking for both of us, but you tell me. For myself, I don't give a shit whether crude oil goes to 200 or 2. I don't care if gold goes to 10,000 or 0. It doesn't matter to me at all. I don't have like this like other bias where like I used to live in Texas and work for an oil company, or like I'm some like global macro, conspiracy theorist, and like that's my shtick or whatever. I'm not a gold bug, although I probably was 25 years ago, but that's another story. I don't care. I'm too old to care. I don't. I'm almost 43 years old. I don't give a shit what direction interest rates go. It doesn't matter. I just want to take advantage of the direction. It's not my fault that we're in a commodity super cycle. It's not like I voted for one in some ballot somewhere. I don't give a shit at all. This is just what's happening, and I just want to make money from it. Are you any different?
No, exactly the same. This is why we talk about it. If it goes up or down, we want to follow it. And it's because we're in the business of making money here. I'm not in the business of being right. There's a difference between being right and making money. And what we're trying to do is follow the trends. We don't care. Our politics don't get involved. Like this is why we look at charts, because it takes our emotions completely out of it. And then we just ride trends. It makes life a lot easier than trying to predict what's next or tell you that the market's going to crash every single day. Those things won't make you money. What does make you money is finding the guys who are reading the charts and telling you what direction to go, because guess what? Price pays, and that's what we do.
An asset prices trend. We know that. It's an anomaly of the market. We know that they're not random. Asset prices literally trend. Here we're looking at a chart of interest rates. These are some of the longest trends. These particular trends last for 3-4 decades. But just bringing it back to commodities, one of the things that I'm most interested in is obviously we've had plenty of opportunities in commodities over the last several years, for sure. But one thing we know for a fact is that historically, these commodity super cycles, as we call them, the reason we call them that is because these trends last for so long. They don't last for years, like never. They always last for decades, 10, 15, 20 years. So yes, there's been opportunities, but I think these opportunities are just going to keep coming.
I totally agree. And this chart really nails it, because if you're looking at the long-term cycle, once again, you get back to 1941, where this chart, right at the beginning of this chart. So see the 1941 low. We're looking at basically, coming out of wartime, depression, the debt to GDP ratio being at an all-time high. And finally, the trend reverses in bond yields for 40 years, which breaks out at the 1981 high, as you're seeing here. And that 1981 high, basically, we're having the stagflation era in the 70s. Rates keep going up, inflation is going up, companies are shutting down because prices are getting too high. They can't even keep up with it. People are dealing with the stagflation of the 70s. If you get to talk to anybody older than you, your grandparents, your parents, and they lived through it, these are great things that they can kind of teach you and talk to you about. But we lived through those periods. So looking at those periods and talking to people who lived through those periods, there's major opportunities in the commodities market. Read the original market wizards. The original market wizards, all those people talking about the futures market, what are they talking about? They're talking about trading that commodity cycle that happened. Now we have an opportunity to do it again after 2020. 2020 low happens. Basically, it's COVID. So we've got all the money in the world basically going in the market. We talked about helicopter money under Ben Bernanke. That was a joke in comparison to what happened in 2020. Gave money to people. Everybody got money that was just live, basically. If you had a PPP loan, if you filed for a PPP loan and had a pulse, you basically got money as well. So basically, everybody got money. There's money flowing everywhere. It creates that spike bottom that we're seeing in the 2020 low. And then inflation looks like it's moving the other direction now. Is it 40 years? I'm not 100% sure, but I know it's not going to be, it's not going to stop tomorrow. I know it's not going to stop in the next 5 years, probably. So we want to take advantage of that. And there's going to be pullbacks just like there were in the 70s or the 60s, 70s, and so on. There's going to be pullbacks. It's going to stall out, but we've already seen it stall out. So let's see what's next.
So here we're looking at commodities relative to bonds. We'll get back to shorter term rates because, I mean, that's a big catalyst, obviously. But we're looking at a ratio here between commodities and bonds. Bonds have absolutely gotten crushed, which despite the lack of progress in the CRB index and commodities indexes that are oil heavy, despite their lack of progress relative to bonds, they've continued higher in this commodity super cycle, right?
Yes, and that's something that people didn't think about much last year is going, oh my gosh, and really like when we're looking at the CRB, we're mainly looking at oil, and looking at oil, energy, gasoline, and people looked at it and went, wow, oil is doing really badly, and all these things are doing so badly, but they're not realizing relative to bonds, actually, they're still holding up really, really well, and they were just consolidating. And now we're breaking out of that consolidation. We're finally moving higher. Now, once again, it's very telling that this is happening at the beginning of the year. That's something saying investors are interested in this area. Money is flowing into it. The COT signals are getting very lopsided, meaning a lot of people, a lot of commercials or producers are buying a lot of commodities, meaning the people who know are in the know see more upside in the commodity sector. So we're seeing more upside starting to happen. We're seeing that move just beginning. So I think this is a really interesting time to look at commodities.
Let's get back to rates. So folks, this is a commodities conversation, right? And this is a multiple time frame conversation. This is a commodity super cycle, in our opinion, which historically lasts for decades, 10 years, 15 years, 20 years, right? Go back and look and see for yourself. So the opportunities, in our opinion, are going to continue to come. So we're looking at long-term secular trends at our backs. We want to be in the direction of the trend. Now, within that secular advance, you have cyclical moves that move in the direction of the underlying trend, and you have counter-trend moves, which we've seen as well. And these happen in shorter-term time horizons. So within the context of this interest rate, historic bottom, that could potentially take interest rates higher for a long time potentially. Why don't we break it down to the short term, Jason? And here we're looking at the Fed funds rate and U.S. 2-year yields.
Yes, and I love this chart, and it's something you and I talk about on our calls all the time, which is, when you have basically the Fed rate, they started to say, hey, we're going to start lowering rates at this point. And the 2-year yield said, that's ridiculous. We're not doing that either. So the 2-year yield starts to bounce. It basically laughs in the face of the Fed, and it starts to move up the day that they basically started to lower rates. So
isn't it unbelievable that interest rates have been going up like literally straight up since the day that they started lowering interest rates? Like, isn't that
Yes.
hilarious? I'll say that one more time for the folks at home, just to bring it back. I'll say it again. The U.S. 10-year yield, the benchmark interest rates market for the United States, started going up and have continued to go straight up since the day that the Federal Reserve started to lower interest rates. And part of that is that the market is a forward-looking discounting mechanism. The market acts first, and then the Federal Reserve does what the bond market tells it to do. How close am I, Jason?
Spot on, spot on. And you know, just looking at this for me, what this said at the beginning was, and the thing I thought the whole time, they were a little bit too soon to start trying to lower rates with inflation really just under the surface. And I kept saying, if this does happen, this is probably going to be when inflation starts to take off all over again. We started to see it show up in services inflation. Now it's showing up in many areas. Egg prices are all over the news once again. You know, once
egg
again,
prices. How are egg futures? Is that a liquid
there
market?
Is no egg futures, sadly. Sadly, there used to be.
Should be.
There should be still. But egg prices
there used
continue
to be
to
egg
rise.
Futures?
Yeah, there used to be egg futures. Yeah. That was good days, probably. Especially now, man, that'd be some great trades. But yeah, they keep going up and up. You know, I had a grocery store delivery guy tell me how, you know, he was going to have to, he made a joke to me, and I've never met this person, you know, when you order something on Instacart, and he said, I'm going to have to sell my wife to start buying eggs, man. Are you sure you want me to pick up these eggs? So that's how crazy egg prices are getting once again.
Talk about market sentiment, right?
Yeah, talk about some sentiment.
Boots on the ground, Jason.
I'm always plugged into the market. I'm always plugged in, but
hard
just
not
looking
to
at
be.
This. Yeah.
Our world.
But just looking at this, it's just saying so much like, okay, the Fed has kind of made a mistake. Inflation is kind of getting out of control. Now, once again, there might be reasons and political reasons that they might need to continue to lower rates. But once again, at the moment, the probabilities are low. And this is the reason why the Fed really does follow the 2-year yield. And we talk about this all the time. JC talks about this a lot. As the Fed follows the 2-year yield, they're probably going to stop lowering rates here because inflation is coming back.
Now let's talk about this is great because here what we're looking at is stocks versus oil, right? So basically stocks versus commodities here, as this line is going, as this is the Dow Jones Industrial Average as the numerator, oil as the denominator. So as this line is going up, as it did for a decade, that's stocks outperforming commodities, the Dow outperforming crude oil, and this peak right here, where crude oil literally traded negative. Literally, the futures contract traded negative. What a classic capitulation there for commodities. And, in my estimation, that was the beginning of the commodity super cycle. And since then, commodities have been outperforming stocks, not just bonds, as we saw here, commodities making new highs here relative to bonds, decade-long highs here in the stock market. Starting to roll over again with meaning that commodities are outperforming stocks, right?
Yes, and what I use this blue line for, and what I found very interesting, this blue line's been on this chart forever, and the reason why I use the Dow is because I can go back further, there's more data. But the one thing that's interesting about this blue line is, if we're looking at oil prices in the late 90s, oil prices hit single digits, under $10. That was all over the news at the time, the big capitulation event. Then, as JC said, 2020, April 2020, the oil front month future goes negative. Big capitulation event. Now we're talking about oil is at that level, and it's hitting those levels around $60. I mean, that blue line is literally hitting around $60. So that's really interesting.
Right there. So here we're looking at crude oil, heating oil, and gasoline. Listen, I don't know much, but I know that these look exactly the same. I don't. Right, folks at home? I mean, are you guys seeing this? I mean, we're looking at crude oil, heating oil, gasoline. What are we seeing? We're seeing former resistance from 2018, 2019, pre-COVID, that collapsed from there, came back, exceeded those former highs, and now finding support, former resistance turning into support, like they teach you in the books. But like we're literally seeing that.
Oh, it's textbook. And it's one of my favorite setups is to see when resistance comes to support. I'm not a one to buy dips most of the time, and I wouldn't buy a dip in commodities 99% of the time. However, when you're seeing this type of move, it's sitting on resistance, and then you got a band squeeze breakout, which we saw, and JC also shared this of mine as well. We saw that breakout happen in crude oil, so now we're getting crude oil starting to move to the upside.
And folks, just to rewind for not everybody's actively trading futures for decades like Jason. For those wondering what he's describing, crude oil got really, really tight. So what that means is that the volatility was very compressed. And you hear us talk about how asset prices trend, yes, but volatility mean reverts. So from volatility compression tends to come that expansion. Crude oil's volatility had compressed more so than at any point in the last several years. So we're looking for an outsized move. From that volatility compression comes expansion, and that's what we're seeing now. We're seeing, in my estimation, the beginning of that expansion in volatility so far. I mean, that's been happening to the upside. So I just wanted to explain to the folks what it is that you were describing there, but nevertheless, Jason.
No, that was well said. And you want to go back to the heating oil chart. But yeah, that was well said. I'm glad you added that in because I tend to just speak sometimes, and I'd love everybody to understand that because that's the basis of this whole trade. So now when we're looking at crude oil, heating oil, gasoline, now heating oil is very similar to diesel. So you can just substitute and just think diesel in your head when you see heating oil. But this is the time of the year where heating oil really leads the way, and it has been the outperformer. We looked at the performance of crude oil year to date, which was 9%. Heating oil is up 12%. It was actually up today when crude oil was down. So I mean, heating oil this time of year is really going to be the outperformer. But just kind of looking at all of these, they all look like they're hitting support. They all look like they're ready to move higher. I would still be on the long side of all these at the moment. These all look really good. Gasoline is lagging behind. Once that really catches up, though, I'd say all three of these would start to really move.
Do we need a weaker dollar for that to happen?
I think for a big move, yes. People have been disagreeing with me on this for a while because, okay, well, if you're looking at historically, now oil and the dollar are super correlated. And that's true, but things come in and out of correlation. To think that the way this is going to work now is going to be different than any other time in the future, and the dollar is just going to rage with oil, I just don't see it. At some point, the dollar is going to put too much pressure on the price of oil that oil is going to start to back off. So I do think that oil is going to continue to move higher, and I don't think the dollar needs to. I think the dollar is going to start to cool off at some point. Look at the positioning for the dollar. JC, you and I have talked about that a bunch. It's not something I want to fade once again
because
the dollar is so strong.
let me just explain to the folks who are not in our meetings. So we look at the commitment of traders report that futures traders have to report to the CFTC who they are. Mm-hmm. Are they commercial hedgers? Like, are you a corn farmer that's trading corn to literally hedge your crop? Or are you a hedge fund, right? You're big, larger speculator, smaller speculator. If you're a retail investor, like, you're explaining to the CFTC who you are. And then that data is reported publicly. So we know if the smarter money or the dumber money is doing what. And when they're at extremes, those tend to be huge turning points. And currently, the smart money is betting on a weaker dollar. The dumb money, so to speak, is betting on a stronger dollar after a huge move in the dollar. So in all likelihood, the smart money is going to be right. The dollar is going to come off, and that's going to be a catalyst. And I'll add one more thing, Jason. While the dollar, I mean, here we are recording this Tuesday afternoon after the close on January the 14th. The dollar's had quite the reversal over the last 2 or 3 days. To potentially be the beginning of that unwind. It's almost as if energy prices and copper have already sniffed that out. No?
Boom. Yes. So that's the way I think of it. It's relative strength, right? If oil can move up with the dollar, why can't it move up when the dollar falls? That's couple things to just think about there. But I think if the dollar comes off, we're going to see oil start to move. We'll probably see gold start to move, copper, Bitcoin. These things are going to start moving to the upside.
I mean, copper's already had quite the move this year. This commodity super cycle, when you study every secular uptrend in commodities throughout history, these are the big three. This is LeBron and D Wade and Bosch is what we're dealing with here. Is that what's right? I mean, there's no
Oh
other way to
yeah.
look at it. These are the big three.
This is the big three. And the reason why I brought this chart today was kind of looking at the 52-week indicator. So why I do this is basically when you're looking at gold, and if you back test this, and crazy people like me spend too much time back testing things like this, which is gold usually rings a dinner bell for the commodity cycle. You start to see gold take off. Then next thing you know, oil starts to move or copper starts to move. Usually copper is the first one to move after gold moves. So gold has already moved. It's already hit a new 52-week high last year. So after it hit a new 52-week high, then copper hit a new 52-week high. Now we're just waiting for oil to hit a new 52-week high. Usually when that trifecta happens is when the commodity cycle starts to kick up again. Now, once again, we're in a commodity super cycle. These things don't go straight up, just like anything else in the market. You're going to have opportunities to buy in. All I'm saying today is it's a new opportunity to start looking at these areas and start taking buy signals in them.
This one, when you talk about commodity super cycle, of course you have to think oil. But man, gold has consistently been a leader in these commodity super cycles, a leading indicator as well, not just a leader. Seems like this one is no different than those others.
Absolutely. And I think that gold is going to be a place you're still going to want to be. I think we're going to see this change in the precious metals market going forward, which is I don't think gold's going to be the leader still, over the next year. I think things like silver is going to start to leave. I think the silver miners, the gold miners are really going to start to take off. That's very normal for a precious metals bull market. So kind of looking at these other areas right now, like I'm not saying sell your gold. I still have a gold position. I like my gold position. It's low volatility. It's making money. It's doing well. But I think it's time to start looking at these other areas that are higher alpha areas like silver, gold miners, even into some of the obscure precious metals, palladium, platinum. These are probably going to give you some buy signals as well. And this is where you make a lot of money as a commodities trader. The precious metals bull market, the commodity bull market, like you can make a lot of money in these areas. And I definitely like the way this chart looks. I don't want to fade it. I know a lot of people are like, gold's over. I'd be surprised. These cycles last for a very long time. Like you see here, the bottoming process at the end of the 90s into 2000s lasted all the way to 2011. This just looks like the beginning of a new cycle. It just broke out last year.
And so I understand, obviously, that not everybody trades futures. Not everyone is a CTA like Jason Pers, and that's where the gold rush comes in. So if you're a premium member of All Star Charts Research, you're already receiving this. And, thanks for all the great feedback and everything. And if you are not, you can subscribe only to the All Star Charts Gold Rush, which includes obviously all the analysis begins at the futures level, right? The actual commodity itself. But the best ways in a lot of cases to express a bullish or bearish thesis in a particular commodity is through the stocks. You'll have gold that'll rally 100%, 200%, 400%. There's nothing wrong with that. That's great. But these junior gold miners in Canada are going to go up 50x, right?
Yes.
That's how it works in these commodity super cycles. And if you don't believe me, go look. But for those of you, and I know there's a lot of you out there laughing because you know exactly what I'm talking about, because we've seen these before. And if you're new to the market and you have not seen a commodity super cycle before, go and see what these smaller energy stocks are doing. Go see what these little junior silver miners are doing. I mean, these are monster moves, and that's where Gold Rush comes in. We're not just looking at gold stocks and silver stocks, but commodities in general, right? So as a subscriber to Gold Rush, you get all of the trade ideas on the Rangefinder app, right? You get direct access to Mr. Jason Pers as well. You get all of our commodity reports that are coming out weekly and the bond report, by the way. A nice added bonus. Good call there, Jason, today to add this as part of it. But guys, if you are interested at all in participating in the commodities super cycle and the bull market that we're seeing there, I can't think of a better way.
No, and I love it. It's a great product, and just like JC said, and Sam and I always kind of laugh about this, JC, which is we do our videos and we're like, here's our target for our gold miners, and then we always kind of laugh to each other and go, they're going to be probably a lot higher than this at some point. We're going to go back and laugh at these targets. So I completely agree with you. Thanks for that shout out. I absolutely love doing this product. Sam and I are always hard at work on it. So, we'd love to hear from you guys and feel free to write into us. I love to hear and answer you guys back. So if you are a subscriber, feel free to hit us up anytime, answer your questions, send you charts, talk to you about whatever you guys want.
And it goes both ways, of course. If you trade futures, great. If you trade only equities, great. If you do both, great. Any questions that you have, I mean, Jason's a real pro and can, really help guide you and hold your hand through, maybe a new space if you are, we talked to a lot of people who've only been trading in the market for the last 10 years and they've had nothing but terrible experiences with anything that has to do with commodities, right? So, it's like, what have you done for me lately? Recency bias sort of thing. Don't let that happen to you. Right? Don't be one of those. For a lot of us who have traded through multiple cycles and have been through commodity super cycle, I can tell you these are the best kinds of cycles. And everything's there on All Star Charts Gold Rush. Just click the link below and join us, and we will certainly see you in there. Also, we just dropped a trade. Aluminum, we talk about copper as a base metal. Aluminum is right in there with it, one of the key base metals. And there is a stock that focuses on this particular metal. And when I see the Dow Jones Aluminum Index and aluminum futures look the same, retracing exactly 61.8% of that entire rally off the lows last summer, we're curling beginning of the year strength. This is where we want to be. Members of All Star Charts Gold Rush have access to the details of this trade. It is a common stock trade, so it's equities. So if you are interested in that, we will absolutely see you in there. Jason Pers, any final words of wisdom before we let everybody go out there into the commodity super cycle to fend for themselves? Some people out there, I know, you didn't even know we were in a commodity super cycle. Well, I'm here to tell you that I think we are. Bet your ass we are.
Oh yeah, I think we're definitely in a commodity super cycle. And a lot of people would say that, last year, oh my gosh, oil isn't doing that well, or the commodity index isn't doing that well. And the commodity index is basically just oil. If you looked at cocoa, if you looked at orange juice last year, if you look at coffee, you looked at natural gas, like these are every trade I'm listing here went up almost 100% last year, and cocoa went up 200 almost. So I mean, these things are moving already. And now this year as we're coming in, and gold also the best performing asset class of the year. Gold outperformed just about every other the major asset classes. So yes, they're moving. And now this year, like we talked about earlier, there is a commodity super cycle starting. We got the signal from gold last year. Now we're coming into this year. We're seeing the signals from oil. It's getting started. So it's a good time to be around people who can kind of help guide you to understand this market, because it trades very differently than everything else. And people like me who are crazy and backtest everything, we know that, and we can kind of help you direct yourself on how to make money here.
Listen, you want to be in things before they're sexy, right? Before your neighbor and your golf buddy and, your uncle are asking you about oil stocks. When they start asking you about oil stocks, we will be selling them our oil stocks, right?
Absolutely.
We want to be ahead of the curve, and prices suggesting that. It's not like we just woke up this morning. It's like, hey, let's make a video about commodities. It's like, no. This is happening, and you're seeing it, right? Because it's happening in real time right in front of you. So, guys, click the link below. Join us at Gold Rush, Mr. Jason Pers. I love you, brother. I appreciate you doing this. Folks at home, you could be anywhere in the world, but you decided to be here with us, and we appreciate that. Thank you so much. See you on the next one. Adios.
Later, guys.